New Amsterdam, the 1600s, a bustling hub of activity where the old world met the new. The Dutch, known for their seafaring prowess and trading acumen, had established a foothold in this new land, eager to expand their influence and wealth. A time of Dutch traders and new beginnings. These traders were not just merchants. They were pioneers venturing into uncharted territories, forging alliances with Native Americans and laying the groundwork for what would become a thriving colony. This is where the story of Wall Street starts. In these early days, the streets of New Amsterdam were filled with the sounds of haggling and the clatter of horse-drawn carts. The air was thick with the scent of spices, furs, and the promise of prosperity. Back then, it wasn't about stocks and bonds. The concept of a stock market was still centuries away. Instead, the focus was on tangible goods, the lifeblood of the colony. It was about simple things like fur and land. Beaver pelts were highly prized in Europe, and the vast tracts of land offered endless possibilities for agriculture and settlement. These were the commodities that drove the economy and attracted settlers from far and wide. The Dutch built a wall to protect their growing settlement. This wall was not just a physical barrier, it was a symbol of security and stability in a world that was often unpredictable and dangerous. This wall gave its name to the street that would become synonymous with finance, Wall Street. Over time, this street would evolve from a simple dirt path to the epicenter of global finance, but its humble beginnings were rooted in the practical needs of a fledgling colony. It was a place where people came together to buy and sell. The marketplace was the heart of their community, a place where news was exchanged, deals were made, and relationships were forged. Even in its early days, Wall Street was about ambition and opportunity. The traders and settlers who came here were driven by the desire to build something new, to carve out a better life for themselves and their families. People came from all over to make their fortune. They arrived from Europe, Africa, and the Caribbean, bringing with them diverse cultures, skills, and dreams. This melting pot of ambition and enterprise laid the foundation for the dynamic and diverse financial center that Wall Street would become. The seeds of American capitalism were being sown. In these early transactions and exchanges, the principles of trade, investment, and economic growth were taking root, setting the stage for the future development of the American economy. Fast forward to 1792. The American Revolution is over and a new nation is taking shape. The streets are bustling with activity as people work to build a new life in this fledgling country. The air is filled with a sense of possibility and hope for the future. Amidst this backdrop, a group of merchants gathered under a buttonwood tree on Wall Street. These men were visionaries looking to create a structured and reliable system for trading securities. They signed an agreement that would change history, the Buttonwood Agreement. This document laid the foundation for what would become the New York Stock Exchange, setting rules and regulations for trading. This agreement marked the unofficial start of the New York Stock Exchange, or NYSE. It was a modest beginning, but it set the stage for something much larger. At first, it was a small group of traders. They met daily to buy and sell stocks and bonds, creating a marketplace that was both dynamic and essential to the economy. But the NYSE grew quickly as America industrialized. The Industrial Revolution brought about significant changes, and the demand for capital soared. Companies needed capital to expand, factories were being built, railroads were being laid, and new technologies were emerging. All of this required substantial investment. The NYSE provided a platform to raise money by issuing stocks and bonds. Investors could buy shares in companies, providing them with the necessary funds to grow and innovate. Wall Street was becoming the financial engine of the nation. The area transformed into a bustling financial district with brokers and traders working tirelessly to facilitate the flow of capital. The NYSE played a crucial role in this transformation, helping to fuel the growth of the American economy and solidify its position as a global financial powerhouse. The early 20th century saw Wall Street boom. The financial district was a hive of activity, with traders and investors flocking to the stock exchange, eager to capitalize on the economic growth. The optimism was palpable and the streets were filled with the buzz of opportunity. The Roaring Twenties were a time of unprecedented prosperity. Jazz music filled the air, and the culture of the time reflected a sense of freedom and exuberance. Flappers danced with abandon, and speakeasies thrived despite prohibition. It was an era of social, artistic, and cultural dynamism. People poured money into the stock market. The allure of quick riches drew in everyone from seasoned investors to everyday citizens. Stock tickers became a common sight, and people eagerly followed the rise and fall of their investments, believing the good times would never end. Stocks soared to new heights. The market seemed unstoppable, with prices climbing higher and higher. The excitement on the trading floor was electric as traders celebrated each new peak. It was a time of boundless optimism and seemingly endless opportunity. Everyone wanted a piece of the action. From wealthy magnates to small-time investors, the stock market was the place to be. People lined up to buy shares, convinced that the market's upward trajectory would continue indefinitely. It was a speculative frenzy that gripped the nation, but the party couldn't last forever. Beneath the surface, cracks were beginning to show. The market was built on the foundation of speculation and borrowed money. As the euphoria reached its peak, the underlying instability became harder to ignore. In October 1929, the music stopped. The stock market crashed. Panic spread like wildfire, and the once bustling trading floor descended into chaos. Investors scrambled to sell their shares, but it was too late. The bubble had burst, and the financial fallout was catastrophic. It was a devastating blow to the American economy. Millions lost their savings. Businesses failed. The ripple effects were felt far and wide as banks closed their doors and unemployment soared. The dream of prosperity had turned into a nightmare. The Great Depression had begun. Bread lines and soup kitchens became a common sight as people struggled to survive. The economic collapse affected every aspect of life, from the cities to the rural heartland. It was a time of hardship and uncertainty. The crash of 1929 showed the dangers of speculation and the interconnectedness of the global economy. It was a stark reminder that unchecked greed and financial excess could lead to disaster. The lessons learned from this period would shape economic policies for decades to come, as the world sought to prevent such a catastrophe from happening again. The Great Depression was a wake-up call. The government stepped in to regulate Wall Street. New laws were created to prevent another crash. The Securities and Exchange Commission, or SEC, was born. Its mission to protect investors and maintain fair markets. The Glass-Steagall Act separated commercial and investment banking. These reforms aimed to bring stability and transparency to the financial system. Wall Street entered a new era, one marked by increased oversight and control. Section 5, post-war boom and the go-go years. After World War II, America experienced an economic boom. Wall Street prospered. New industries emerged, like technology and consumer goods. The 1960s and 70s were the go-go years. Investors sought quick profits, conglomerates were formed, the financial world became more complex. But this era also saw the rise of insider trading and other unethical practices. It became clear that regulations needed to evolve to keep pace with the changing times. Section 6, Black Monday and the Tech Bubble. The 1980s brought deregulation and a bull market, but it also saw the Black Monday crash of 1987. The market plummeted, but it recovered relatively quickly. In the late 1990s, the dot-com bubble inflated. Investors poured money into internet companies, many without profits. The bubble burst in 2000, leading to another market downturn. These events highlighted the volatility of the market and the importance of sound investment strategies. Section 7, the subprime crisis, a house of cards. The early 2000s saw the rise of subprime mortgages. These were risky loans given to borrowers with poor credit. These mortgages were bundled together and sold as complex investments. When the housing bubble burst in 2007, these investments collapsed. Banks failed. The global financial system teetered on the brink. The 2008 financial crisis was the worst since the Great Depression. It led to government bailouts and new regulations to prevent another disaster. Section 8, Wall Street today, a changed landscape. Today, Wall Street is different. Regulations are tighter. Technology plays a larger role than ever before. High-frequency trading algorithms execute trades in milliseconds. The rise of fintech companies is disrupting traditional financial services. Cryptocurrencies and blockchain technology are changing the way we think about money. Wall Street is adapting to these changes. It remains a center of global finance, but its future is uncertain. Section 9, the future of finance, technology, and beyond. What's next for Wall Street? Technology will continue to reshape the industry. Artificial intelligence and machine learning are automating tasks once performed by humans. The demand for sustainable investing is growing. Investors are increasingly considering environmental, social, and governance, or ESG factors. The future of Wall Street will be shaped by innovation, regulation, and the evolving needs of the global economy. Section 10, the enduring legacy of Wall Street. Wall Street is more than just a street in New York City. It's a symbol of American capitalism, innovation, and ambition. It's a place where fortunes are made and lost, and where the future of the global economy is often decided. Despite its flaws and crises, Wall Street has played a pivotal role in shaping the modern world. Its story is a reminder of the power of finance, the importance of regulation, and the enduring human desire for wealth and progress.